Hello guys and welcome to this video. I want to show you the benefits between an ETF in comparison to a single stock and what risks you have with a single stock, but let me come to that a little bit later. I will start to show you my portfolio, which I started investing in October in the past year. It's almost 12 months until I invest into ETFs and as well in a couple of single stocks, which I took over from my old portfolio. And as you can see, the past 7 days I made around $115 in profit. And if we go from month to date right now, it brings me around 170 in total. And if we go in the most interesting area, it's my overall profit. And as you can see, I did my last transfer around the 23rd of August, where I was at 4,858 and I invested $400. And since then it went a little bit down, and after that still it go to an all-time high, and I didn't made another investment. You can just see how my ETFs and my whole portfolio going through the roof, and that's the reason for that. I made overall profit of almost $600. And as you can see, here's my MSCI World, which is my biggest holding. After that, my emerging markets is my second biggest position, and then I have a couple of other ETF and as well my WU ETF, which bring me around $36, and I bought it like 1 month or 2 months ago. That is the reason why you should listen to me. So I just googled the top 10 most valuable companies over the world. I ranked them from 1 to 10, and I go through the ranking from 1 to 10, and as you can see, Apple is the number 1, which is around 227.55 in the current value. And if we go to the overall performance, because I think that is really interesting, you see what would happen if you bought these types of stocks in the past or even more at the beginning. But we are not in times where we just cry behind our past. We are even more thinking about now and what probably will happen in the future. And that's not just with Apple. And we can see Apple, how much money they have. They have a market cap of 3.54 trillion. And I think that's very interesting. The second place is for Microsoft, and as well it will be at all the companies the same situation. You see they started in the stock market in 1986 with 10 cents, and just imagine you bought around $100 into that stock. You made a lot of profit in the moment, but we can't change the past. What we can change is the future. Let's continue to the third most valuable company in the world, and it's Nvidia. And with Nvidia I am with mixed feelings, because after my research it is probably right now overvalued, and they missed a couple of steps where I don't want to go too much into the detail, but at the end you see there was not a lot of time horizon where they skyrocketed. I think they are very overvalued, and I don't know if they're crashing or not, but this is one reason why the S&P 500 and a lot of other companies where are US based get high profits, because you have to imagine it was a bigger upwards trend than a lot of cryptos, and that's insane if you think about it. How has the stock market changed completely? Because how could it be that one stock gains in such a short time over so much value? And we can check how much their market value is. With Microsoft it's around 3.2 trillion. That numbers is so insane. And Nvidia has around $2.98 trillion inside of their market cap. The next company is Alphabet, and that means we have Google. They have a class A and a C, and it will be the same like the other 3 companies which I already showed you. The 5th place is Amazon, and Amazon is as well. They started 1997 with 9 cents, guys. If our parents would invest a little bit into that, we would have a lot of cash, and I think it would be even more cash than building or buying a house or a flat or something like that. The 6th place is Saudi Arabian Oil and Co. I didn't know them, if I'm honest, but after my research showed me they started in 2019, but they have a lot of market value. Just let me check. This is just one example website. You can use a lot of different one, but here you have Google with around 2 trillion, Amazon with as well around 2 trillion dollars in market cap, and here you have Saudi Arabian Oil with 1.75 trillion. So the 7th most valuable stock in the world in the moment is Meta, and they changed as well their name. As you probably know, they needed a new image, and they started in 2012. It's insane, guys. If you look at the past and how they developed over the time, every stock is skyrocketed of them. At number 8 is Berkshire Hathaway, and as you can see, this is the class B. We have as well the A, and the A class is around 600,000. $2,000 per share, and the class B, they started in 1996 with around $24. And as you can see, Meta has 1.45 trillion and Berkshire Hathaway has around 993 billion. Let's continue with number 9. Number 9 is Taiwan Semiconductor Manufacturing, and they started at January 2000 with around $65 per stock. And as you can see, it went insane with the numbers. And last but not least, we have number 10. I thought they have no charts available. Okay, from the day they don't have a chart available, but we have still the maximum view, and they started at 1995 with around $22, and right now one stock is around 70.50. And Taiwan Semiconductor has around 900 billion in market cap, and Eli Lilly has around 842 billion. These are insane numbers. But if you are a long-term investor like I am and invest into the S&P 500 or similar, as well if you invest into the VT or VTI, you will catch a lot of companies from the S&P 500 or the MSCI World. It's the same. They have 66 or 67% into the US stocks. So you don't get around of these company and these lists. If we just look very, very far back at 1990, you had here companies which are not even listed in the top 10 anymore. And as you can see, you have IBM, ExxonMobil, Shell, Walmart, etc. and Coca-Cola. And you know Warren Buffett invested into Coca-Cola. And you see how it developed, and this is the biggest risks. If you are a single stock investor and have to choose which stocks are good and which stocks has a lot of value and bring you profit and are beneficial for a shareholder, you have to make all the research. And I don't want to make the research, because here in the 2000 you see as well, there are a couple new one like Pfizer. They weren't there in 1990. And you have as well a couple of companies which are going to the bottom area of the top 10. For example, Shell. And as well you have Microsoft, which is included completely new. It wasn't there in 1990 because they weren't created, or Intel. And then these are a couple of companies where you know even more. And if we go to the 2010, it is always like a 10 years period. You have newly here Apple and Chevron and P&G, AT&T, Johnson & Johnson. And these are not bad company, don't get me wrong, but as you can see, it's changing a lot. And if something is changing over 10 years period, and we can look at the historical data, you should know that you have to do a lot of research and know when to sell a stock, or even more, when to buy it or hold it. So for that reason, it is for me a lot of risk, and I don't want to risk. I don't want to spend that much time and energy into the research. For that reason, I just invest into the S&P 500, and I know right now in the moment Apple and Nvidia and Microsoft and as well Alphabet has a really huge amount of the S&P 500. And if you don't want to invest in one or another stock, you don't have a choice, because these are the highest market cap and you are forced to invest into them. If you invest in single stocks, I just open up, for example, a site like Morningstar. There are a couple of stocks which went that good, where you try to get money out of it or overperform a ETF, but it's so hard to overperform it. And then you have as well examples like Wirecard, which got bankrupt in 2020, and a lot of people lost a lot of money as well. And that's one thing that I don't want for the future. And you should always be known for these types of risks. And I just wanted to show you my watch list, because I put 2 stocks into it which I think are very interesting. And one stock is a Swiss pharma company which called Roche, and I think in the moment they have a lot of potential to grow. Just let us look into the Google view, because we're probably used to it. And as you can see, they were very cheap at the beginning and then started directly with 100 francs. And here was, I don't know what happened here, but as you can see, it's still developing. And the other stock is Alphabet, you know that. But I think like they own so many things, and it's the most used platform to search in as well. And you have YouTube inside of it. I think it will grow over the time. For that reason, probably that will be one stock which I want to invest as a single stock in the future, but not for now. First, I want to gain around 100,000 in total in ETFs, and after that I will start to play a little bit around and invest into single stocks. And that's all for today's video, guys. I hope I could make it clear for you why it's also risky to invest into single stocks and what kind of disadvantages you have. And for sure, you can as well gain money, but you have to spend time, money and energy for that. And if you want it or not, I think the S&P 500 or a ETF is the best way to get it done without all the search, energy and time consuming things. Thanks for watching. See you soon. Bye bye.